All right, everybody. Happy Halloween 2022. Welcome to this month's installment of Rockstar Tools to help you survive market downturns. Changing markets, changing times require elevated skill sets. I am your host of today's episode, Cheryl Knowlton, CEO and Chief Energy Officer of Dynamite Productions. But the real star of the show today is one of my dearest friends, one of my oldest friends, my very good friend, Aaron Woolley, accountant extraordinaire. And today's episode on Halloween is how not to be scared of the IRS and all of the things and changes, especially for small businesses, and how to position your business for success. Aaron, yay, you're here. I should pull out my pom-pom.
Excellent. Well, we're going to go ahead and get started with this little presentation on not be scared of the IRS. And lately we've got that. So the IRS.
Woo, I love this.
Don't be afraid of the IRS. Position your business for success. By me,
by you,
certified management accountant and enrolled agent.
Yes, and my certified rock star of all things for all the businesses I have ever owned and will ever own in my lifetime. Yay! My trusted advisor. So, oh my gosh, I've had so many agents, real estate agents, reach out to me and say, oh my gosh, is it true? The IRS is really hiring 87,000 new agents? What the heck? Why? What is that about?
Exactly. And the questions are being asked is, what are they being hired for? So we can go ahead and click on these next couple things. What's really going on? And who are they hiring? And what will they be doing? You know, why and what for. So
what the heck? And are we all going to burn? What?
Right. Are we all going to burn? You know, what's really happening here? And as you might notice, I've noticed lately, the IRS representatives have not been as friendly as they have been in the last few years. We had a friendlier IRS just a few short years ago, and recently in the last few months, I've noticed their demeanor and their response is not as friendly, is not as helpful. So I'm not sure what's in store, but that's been my personal experience when I've had to contact the IRS for a variety of clients and for a variety of reasons, and the agents have not been as helpful or as kind. They're a little more curt. Let's go on to the next slide here. 87,000 new IRS agents. What does that mean? Well, actually, if you look at the Rose Bowl, that's enough to fill the Rose Bowl. The Rose Bowl, I think, has about 96 or 97,000 capacity. So 87,000 more agents is quite a bit. Yeah, so the next line item that we have here is that this is part of the Inflation Reduction Act, which consists of about $80 billion funding going to the IRS, which is part of the $800+ billion act. $300 billion is going to the deficit reduction. $369 billion is going to climate and energy items, and $64 billion is going to Obamacare subsidies, and then $80+ billion is going to the IRS, which is a huge amount of money. Currently, the IRS is going to apply 57% of that, $45 billion, to fund additional enforcement. So with this $80 billion, they're using 57% of it to enforce tax collection. And they're claiming that it's to close the $600 billion tax gap, which actually is the difference of what taxpayers owe versus what they actually pay. Next little item here we have, one more sentence here, is that the enforcement is going to include, what that means is enforcement agents as well as investigative technology. And some contend that it's merely only replacing agents that are leaving in mass volumes. But $80 billion is typically not funds to replace an employee when they leave. With the fire departments and police departments and corporations, when someone leaves their position, that funding, you don't need additional funding to replace that employee. Additional funding is just this 87,000 new or additional agents, not to replace. So let's go on to the next item. So the staff that they're going to be bringing on, currently revenue agents, those are auditors, and they enforce taxes that are due, penalties and interest, and they can refer a case to a criminal investigation and tax court. Currently, we have about 8,321 employees. Okay, they're going to add 57% more to that. Revenue officers are the next staff, and that's to collect delinquent taxes or to obtain past due tax returns, and they can garnish wages, impose liens, levies, and property seizures. And there's approximately just short of 2,800 employees currently. They're going to increase that. Tax examiners, they review tax filings and make proposed adjustments to tax returns and impose penalties and interest. And there's currently about 8,758 employees currently, and they're going to increase that by 57%. And then there's the special agent. Ooh, baby. Those are the law enforcement. They're the law enforcement side of the IRS. They carry a sidearm. They're members of the Criminal Investigation Division of the IRS, and they are tasked to investigate potential crimes or current crimes. There's 2,100 of those agents that are armed, and they're going to increase those agents by 57%. And then the rest of them, there's about approximately 56,000 employees that are admin and IT and whatnot. Okay, so 72% of the IRS staff is support staff, and then the rest here is our enforcement agents. The next slide there.
I think they have enough people to be nice to you when you call on behalf of your clients, for heaven's sake.
Right. So this is what everyone's getting scared of. Don't lose your head. When you they will. This is the IRS website and the hiring ad and description of the special agents. And the highlighted item is that they're to carry a firearm and be willing to use deadly force if necessary. So this is what has a lot of people upset and scared, but there really isn't a reason to be scared if we prepare ourselves. Next slide here. So notes on the IRS commission, the commissioner meeting with the National Association of Enrolled Agents that I attended this last summer. And the current commissioner, Charles Rettig, was there along with his 4 to 6 private or actually security officers. So that was interesting. He's always surrounded by security, armed security, because who likes the IRS? He did say that they'll be hiring thousands of IT professionals to upgrade systems and implement electronic coordination with tax professionals. So they're hoping to add a new system that tax professionals can communicate with the IRS on a electronic basis. Right now, it's currently just via mail or phone calls. And they did say that here's the problem. The main problem here due to COVID, when COVID was planned out and rolled out, they sent people home. And the IRS receives a lot of paper mail. They have 8 million unprocessed tax returns.
Whoa, over what? I see that, and I'm like, feel like I need to do a cartoon rubbing of my eyes with some music. I'm like 8 million unprocessed tax returns over what period of time?
Well, we're talking 2019 and on. And so what they've done, and that's what is accumulated. They only answer 11% of the phone calls that come in.
Oh my stars.
That's been one of the main issues, is that when we try to get a hold of the IRS to discuss a complicated issue or a notice that a taxpayer has received, you get the courtesy hang up. If you don't call exactly at 7 a.m. their time, I had to wait at 7 o'clock. It's phone roulette. You wait for the clock to turn around, and once it hits the hour, you dial. And if
Wow.
you're lucky, you get in the queue, and your wait's going to be in an hour.
Holy cow.
If not, and you get the courtesy hang up that they have too many, the call volume, you're done for the day. You can't call any further.
That's
So they're saying that there's been a 17% reduction in workforce since 2010. That's not a huge reduction I see over the course of 10 years. Over 10 years here, they've only reduced their workforce by 17%. I've seen a lot of companies that have cut back a lot more than just 17%. So I don't think that that's too drastic, but they believe it's drastic, losing 17% over 10 years. Currently, they have an aging workforce that's going to be retiring in the next 5 years of 50,000 agents. So that is a concern. They say, gee, we don't have experienced individuals, and we've got 50,000 agents out of the 78,000 that they have currently, and they need to be replaced, and we need to train new blood, right?
right.
So I understand that. That's an issue that a lot of corporations have. But the IRS is planning on increasing their audits.
Yeah.
Note that this is an interesting thing, that there was a 75% audit drop under conservative leadership, but now the IRS plans on increasing those audits under liberal leadership, according to Forbes articles. So that's why when we call into the IRS and we actually finally get an actual rep, a live person on the phone, they're not friendly, they're not helpful. I have noticed a huge difference between the agents, the IRS agents call centers that are answering on the East Coast versus Mountain Time.
Really?
The Ogden, Utah IRS group actually seems to be a lot more friendly than the East Coast reps. So it's a lot more of a pleasant experience when you're talking to an agent that's closer to the West Coast here. So I don't know why that is. It just so happens. But there's a lot of philosophies that we could throw out there why that might be, but that's the case. The audit risk will increase for income earners of $400,000, and they're going to target the high net worth individuals, the wealthy, they say. So that is true. If you are making $400,000 or more, your risk of audit has just increased dramatically. Next line.
Yikes.
The IRS will begin auditing pass-through entities. Now, this is the thing that we need to be concerned with. This is where the 400,000, it's not just segmented out for the 400,000. We have to look at pass-through entities, which are partnerships and S corporations. They're going to be auditing the reasonable compensation. So this is one thing that we need to pay close attention to. Next little line. So this is interesting. Mainstream media has been attempting to minimize the impact of the increase of IRS employees will have on taxpayers by stating the new hires will be replacing employees that are leaving. One more click, please. This is a lie. This is a lie. As I stated before, when you replace employees that have left or retired, you do not need further budgets. When a corporation has to replace retired employees, they do not have to increase their payroll budget to replace that individual. It's simply taking, hey, you retired, you take your retirement, and now we use the salary that we used to pay you to pay the new employee. No further funding needed. Again, this is a lie. Next slide.
Okay.
So,
yeah, I stopped breathing at the last slide. So if you're with me, friends, and you're not breathing right now, let's take a deep breath and learn. All right, now let's buckle up and figure out, what do we do about this information, and how do we prepare our businesses so that we are ready for whatever comes, right?
Yep. What you need to do today. what you must report, what you can deduct. So let's get straight to the point.
I love that, because all we can do is focus on where we are today. What can I do right now? And I'm loving these graphics and these memes that you put together and these GIFs you put together. So fun. Hello, Mickey Mouse. As a bat, if I see that in my sleep tonight, you're going to get a phone call from me.
The little bat. That's right.
What can we do today, Aaron? What can we do?
Well, the first thing is, if you're running a business and you have not incorporated your business and set it up as a legal business entity or a separate entity than a sole proprietor, you need to do that today. Next
Okay,
thing,
how do they do that? If they haven't done that already, how can they do that?
well, a guy like me can help them incorporate for a lot less money than an attorney can. And so they can, give my office a call, or they can seek local help from an attorney that can incorporate them or generate a partnership for them. But they need to do it, and they need to do it now before the year ends, and get their business and their income and expenses taken care of. Let's go to the next little line item.
Okay.
The next thing here is that you have to have meticulous bookkeeping. If you have not been tracking your transactions, you need to do it, and you need to do some catch-up work today and start doing some bookkeeping. Start tracking your income and your expenses. Next line.
There we go.
Now, of course, the IRS demands that you report 100% of your business income.
Mm-hmm.
And then you can expense 100% of your all legitimate business expenses. So you need to think outside of the box and what is deductible. And that's what we're going to go over next. And then you, of course, report your payroll to yourself. You have to pay employment taxes. Now, this is the key item that the IRS is drooling over. There's a lot of S corporations and partnerships that the owners do not pay a payroll to themselves. And what is the IRS missing out? So let's say I own a corporation. I have my own business here, and I typically will just take money out from the business as I need it. Okay, and of course I pay my business expenses from the revenues that I earn. But I'll take a little bit of money here and there to pay personal expenses with, right? And I transfer that money, or I write myself a check and I deposit into my personal bank account, and then I'm able to pay my personal expenses. And at the end of the year, I run my books, and I take my 100% of my earnings, and then I deduct all of the business expenses. And what's left over is typically a profit. And usually that profit, I've already taken most of that money out of the business to pay my personal expenses, but I didn't pay a payroll to myself. But no worries, that profit rolls over to my personal tax return, of which I report that on a K-1 as business income. And the IRS then taxes me income tax on that. And I pay my taxes just like everybody else. Except, what is the IRS missing? What the IRS is missing is the payroll taxes. It's missing the FICA. It's missing Social Security and Medicare. And it's missing federal unemployment tax. And so that's where payroll comes into play. Now, if I took out $60,000 from my business, or $100,000 from my business, the IRS is missing out on $7,650, that FICA amount, 7.65%, plus they're missing out on another $145 or so on my federal unemployment tax. So they're missing out on, $7,300 in tax. They're not getting that because I'm not paying a payroll. So they want it. And that's where they're going to get it from the little guy. The little guy that's just, the construction worker who's got he's got his corporation. He does handyman work, whatever it is. He's making $100 grand a year, a decent little living for himself, or maybe a little bit more. And then you have the real estate agents that are doing their sales, and you have other, actors and actresses and creative artists that are selling their wares and their creativity. They want the payroll tax, and that's where they're going to get it. If they're able to collect another $7,000 to $8,000 for every corporation, every S corp, and every partnership out there, that's a lot of money that they're going to collect, but they're not. So that's why it's important that we're going to have to start reporting a reasonable payroll. And this is the item that they're looking at. A lot of corporations and partnerships do not do that. So, and then the other thing you need to do today, which I've always encouraged my clients to do, is set up your IRS account today. Go to irs.gov and log into my, access my personal account. And you go in there and you do it through id.me. That's a separate thing. I can help you with that as well. But it's fairly simple if you just follow the steps and set up an id.me through the IRS, and it will verify your identity, and then you'll be able to get onto the IRS website and see your transcripts. And that's so important to be able to see your transcripts of what the IRS has on you. That's one of the things you can always do to protect yourself. If you're in a battle of sorts, legal battle or whatever it is, it's always good to know what the opposition has on you. What kind of evidence do they have? And so this is what you need to do, is get onto the irs.gov, log into your account, look at your wage and income transcript, and that will show what income has been reported. For instance, if somebody sent you a 1099 for income and you didn't receive the 1099, and you forgot about it, you forgot that they sent you $2,500 sometime last year, but they sent a 1099 and it didn't quite get to you, but it's attached to your social security number, the IRS believes you had that $2,500. And if you don't report it, then that's understatement of income, and the IRS will come after you for that. Okay, so next item, let's look at what we can do, what we must report. Of course, we have to report 100% of our income, legal and illegal sources. The IRS doesn't care if it's legal or not. They want to tax it. So, and in fact, some people, if they have illegal activity or illegal income, the IRS doesn't even report the illegal activity. They don't care. They just want you to pay tax on that revenue. So that's what you must report. Let's next item. So now we get a little gift here, okay? We get to deduct our expenses. The IRS says you must report your income. They don't necessarily tell you that you must report your expenses to deduct or reduce that taxable income.
But we can.
But we can, and we should, and that's where we can do that. So here's some items that we can do. Start thinking outside of the box. There's advertising, sales and marketing, auto expense, lease, loan interest, fuel, repair and maintenance, benefits, medical, dental, vision, health and wellness items, continuing education and conferences, bank and credit card interest. Next time, let's just keep going. Dues and subscriptions and insurance, auto, general liability, professional liability, E&O, which is errors and omissions, maintenance and repairs on your auto equipment or building, legal and professional fees that you pay out.
Yay, I can deduct what I pay you. That's fantastic.
That's correct. You get to deduct that. And your office expenses and supplies, your telephone, your utilities for your office, your postage and shipping, your rent, wages, salary, and outside services. This is really important. Again, that's what they're going to be looking at, is are you paying a reasonable salary to yourself? You can deduct travel and meals for business only, not your personal vacations to Disneyland. Moving expenses of over 50 miles, if you've had to move over 50 miles because of work. Your donations, you can deduct that. You can deduct your startup expenses up to $5,000. Anything above that, we have to capitalize it, amortize it. There's mortgage interest, residual on Schedule A, residential mortgage interest on Schedule A, or if it's a rental property, you can deduct 100% of it on your rental property. Return your property taxes. Residence is on the Schedule A if it's your primary residence, or if it's rental, it's 100% deductible. Next item is your taxes, licenses, and permits, like state tax paid, your local tax paid, payroll taxes, retirement contributions, SEP IRA. If you haven't set up a SEP IRA, it's important to do so. If you have your own business, you can actually deduct 25% of your earned income up to $61,000, whichever is lower. And that's a great benefit and a great way to reduce your taxable income. And then, of course, depreciation on capitalized assets and on your rental properties. So it's all scary, very scary. But the biggest thing that we need to do to protect ourselves against the IRS coming after us is to begin making a reasonable salary for payroll to the as owner compensation. And that's the question, really. You could do it monthly, you can do it quarterly, you can do it annually, but you have to make sure that you are paying yourself a payroll, and that's key, a very key item. The question really is what is a reasonable salary? And that's where you're going to have to work with a professional tax individual like myself, either an enrolled agent or CPA or somebody, to really figure out what is reasonable for your business and for your industry. And that can vary. So we kind of look at that, and it has to be analyzed on a case by case. I can't sit there and say, oh yeah, it has to be 80% of your revenues, or it has to be whatever. It has to be reasonable. So that's a discussion that has to be worked on. So there we are. The next thing, and the last thing, is your meticulous records. Document, document, document.
Yes.
Make sure you have receipts, bank records. Put a client name on those receipts. Then you can deduct what you deduct must equal your receipts. So you just can't put an arbitrary number in there. You got to be able to calculate those receipts up and have them match. So there we go. Have a happy Halloween. One more click, and don't lose your head. It will be all right, just as long as you incorporate yourself, make sure that you've got a good business entity now, and that you are paying a reasonable compensation to yourself as the owner of that said corporation, and then you're going to be all right. So I really appreciate the time and be able to kind of go over this. It's a lot of information, but the most important thing is, again, incorporate, document. And if you need assistance with any of that, my office is certainly more than happy to assist.
Because that's what I'm hearing people say. Oh my gosh, I don't even, what did you say about incorporating? And I don't know how to do that. How can people reach out to you so that they can get the help and the assistance, walking them through this if they find themselves in need of wanting to protect themselves from what's coming?
Well, my website is called accountantonthecloud.com.
Accountantsonthecloud, all spelled out.com.
Yep, and you can certainly reach me through there, or you can call 866-546-8660 and reach us that way. 866-546-8660. Accountantonthecloud.com or 866-546-8660, and you can reach me that way as well. And we'd be more than happy to help you get your business organized and set up to where you're set for 2022, going on into 2023 with a new business entity and the proper tools to maximize the deductions and minimize your tax liability.
Love it. So I hear some real estate professionals, especially newer ones, saying, wait a minute, nobody told me that I needed to set up a separate legal entity. Why can't I just have my broker pay me directly?
Oh, well, you certainly can, on a real estate agent, have your broker pay you directly, and that's fine. The problem with that, though, is that you're not going to be able to capture all of the business deductions and reduce your tax liability, and you're going to pay the most tax that way. If you're able,
are so great at helping me avoid.
If your broker is willing to pay a loan out corporation, your corporation, let's say you ink it, and they're willing to write a contract that will pay your corporation for your services, and that's what we call a loan out corporation. It's, here's a contract for XYZ Corporation for the services of Aaron Woolley. There you go. That's a loan out corporation, and that's fine. They can pay the commissions that way. Some brokers won't do that. But there's other ways of deducting those business expenses through a corporation. A lot of brokers, the stock brokers, will do this because the Securities Exchange Commission will not allow these investment companies to pay their agents or their stock brokers to the corporation. So they have a corporation, they receive a 1099 in their personal name and social security number, but then there's a way to assign that income on your personal tax return to your corporation, and it's completely legit. The IRS accepts that, and they're able to basically run everything through their corporation. Although the 1099 for $1 million point some odd dollars is to their personal tax return or personal social security number, they're able to assign that revenue to their corporation, and there's a way to do that as well. And we've seen that for thousands of securities brokers as well as real estate agents as well.
And what I'm thinking right now is I would rather shave my legs with a cheese grater than deal with the IRS before or after they became rude, surly, and not answering all their phone calls.
Yeah. Well, one of the good things that might come out of this 87,000 is the IT. They are going to upgrade the systems for the IRS. They are on an archaic system that's 25, 30 years old. So they are going to upgrade their computers and their systems and their operations that way. I'm sure there's a lot to do with that. And it's hopeful that they're going to have some sort of integrated access for tax professionals to be able to communicate with them electronically. Don't know how that's going to look or when that might be, but they are thinking about it at least.
That'd
So
be
hopefully
great.
that'll happen. So there's a quicker response time for to address certain issues with clients and taxpayers. So
That's a good thing. That's a beautiful thing. I love that. And is it expensive to have you help people set up a corporation and get that all arranged?
well, it's not that expensive. It's about half of what an attorney will charge. So and it depends on what state you're in and whatnot. But yeah, it's worth the call to find out and have us give you a quick quote over the phone or via email. We can certainly do that. So it's not that
Beautiful.
expensive.
I love that. All right. Well, thank you, my fabulous friend, Aaron Woolley. Happy Halloween, everybody. And there's nothing to be scared of as long as you take the proper preparations and make sure that you are ready for what's coming.
All right. Thank you.
Thanks, everybody. Have a great day.